DT7 has a new, very powerful scan, and it's really a combination of two previous scans that we've had in previous versions of DT6 and before. And as you'll see when I describe this new DT dual time frame scan, you'll see how it combines the features of prior scans and, more importantly, allows in a single scan to scan any number of portfolios. So let's take a look at this new scan. In this video, we're going to take a look at a brand new and very powerful scan that's in version 7. So let's go to the scans menu, and the drop down of the scans menu may look a little bit different in yours in the final version of DT7, but shouldn't be much different than what you're seeing here. The DT dual time frame scan is really a combination of two scans that we had in DT6. That's a combination of the rate of change in DT oscillator scanner and the DT dual time frame momentum reversal scan. So it has the features of both of those scans combined into one, and it allows us to scan multiple portfolios instead of just one portfolio at a time. So for those that are just beginning with DT in version 7, you probably won't use the ROC and DT oscillator scanner or the DT dual time frame momentum reversal scanner. The reason we're leaving those in DT7, I'm a firm believer in, once you have some major features in a program, you leave them in even if a new feature sort of takes the place of that, just because there's so many people that may be used to those older features and want to continue to use them. So let's take a look at the DT dual time frame scan and see what kind of information it gives us. So in this scan, what we're going to be looking for are markets. In this case, we use this scan a lot with stocks because we can go through hundreds and hundreds of stocks in a matter of a minute or two and pick out the best dual time frame momentum setups. So the scan compares a stock to its sector if you want to set it up that way, and that's how we set it up. And it compares the sectors to the broad market, such as the S&P. So, for instance, I have a scan set that's ETF sectors. I have about 20 or 23 or 4 portfolios in that ETF sector scan set, and each portfolio is a major sector represented by an ETF, and then within each of these ETF portfolios, I have the top 10 or 12 volume stocks for each one of these sectors. For instance, the biotech sector, these are the symbols of the major stocks, the highest volume stocks that are within that biotech sector. So we can scan through 10, 15, 20, 30, 40, however many portfolios we want, and each of those portfolios can have as many stocks in it as we want. In this case, I have about 22 portfolios, each an individual sector, and I have about 10 or 12 stocks in each, so somewhere in 200, 250 stocks that we scan. So it first looks at the momentum position, dual time frame, weekly, daily momentum position of the S&P. It compares the sectors themselves, whether they're as strong or relatively strong or weak as the S&P, and then it compares the stocks within the sector. And it will show us which ones are relatively strong or weak and which ones, as of the day of the scan, have bull or bear reversals in their daily momentum, and it will highlight those as particular stocks that we want to take a look at. Let's do the scan and see the results real quickly so you can see how powerful this scan is. So what the scan is doing right now, it's comparing the individual stocks, whether they're relatively strong or weak compared with their sector ETF, and it's comparing the sector ETF with the S&P. So it's kind of a top-down approach. Which sectors are relatively strong or weak compared with the broad market S&P, and which stocks within that sector are then relatively strong or weak within the sector. These are all the sectors that were scanned. There's about 22, and the stocks within them. And what it shows is that the S&P weekly momentum is bull. So we only want to take a look at those sectors where the weekly momentum is bull, and only the stocks within those sectors where the weekly momentum is bull. So we want everything going in the same direction, and we also compare them whether they're, in this case, since the weekly momentum is bull, only those sectors and those stocks within the sector where the 4-week rate of change is at least as strong as the S&P, as strong or stronger. So for instance, we have the weekly momentum is bullish, but the daily momentum is bearish. So that means you want to be flat until we get a bullish reversal in the daily momentum. And as we can see here, the reason these stocks have been chosen and this sector has been chosen is, one, because the weekly momentums are the same, and number two, the rate of change of the S&P is 2.1%. So the rate of change of this portfolio, the XLY, which is consumer discretionary spending stocks, is relatively stronger than the 4-week rate of change of the S&P, and it's only showing those stocks that have a 4-week rate of change that's equal to or stronger than the sector rate of change. So it's only those stocks that are as strong or stronger than the sector, and only stocks within those sectors that are as strong or stronger than the broad market. So even though right today, as of the day of this scan, we would be flat all of these stocks, as soon as their daily momentums became oversold or bullish, then we would look for a long trade. Let's look at some of the other sectors. So for instance, here's a sector in a stock that has, the sector of course is as relatively strong or stronger than the S&P, and here's a stock in that sector. The stock symbol is WY, and the IYR, which is the U.S. real estate sector, which the daily momentum is bullish, and it made a bullish reversal on the day of the scan. So just think of this. We have a sector that is as strong or stronger than the general market. Momentum's in the same direction. Rate of change is stronger than general market. And a stock within that sector that is relatively strong within the sector, and as of that day it made a bull reversal. So we would want to take a look at that stock and very closely, as it would be one of the few that as of that day should be a great setup to consider a trade. So for any of the stocks that come out with a result, all we have to do is click on the symbol. We can roll up the this report, and this is the chart of that symbol. We can set up a template with any information that we want when we click on that chart, and it'll come up. I just have the DT oscillator showing here, and that was run on the 16th. Let's just see where we're at here. Excuse me. We'll get the scan was run for the 16th. We have a little bit more data on here, but I'll show you where the 16th is, which is that day right there. And excuse me, should have set this up a little bit better for you before we started. This is the day the scan was run. This is the day we had the bullish reversal for the setup for a dual time frame momentum setup on a relatively strong stock within a relatively strong sector in the market. And it looks like we got some pretty wild wide range days here, but it has been net uptrend for at least a few days following that signal. And that's what we're looking for. We're looking for the high probability, low risk trades for the trend direction and a hook to get into the trade. Now let me roll this window back down and show you a great feature of this. primary ones we want to look at, symbols that are ones that have the bull or bear reversals on the day of the scan. So what we set up, rather than having to go through all of these different sectors and look at all the individual stocks to see which ones have the reversals that day, we can click on just display only bullish or bearish reversals for the day. So now we're down to just 4 different sectors, and it looks like there's probably just 1 or 2 stocks within each sector that had a bull or bear reversal on the day of the scan. So out of about 250 stocks, frankly, there's 3 stocks here that I would focus in on. Looks like 4. We got 1 in each of these sectors as of the day of the scan. And isn't that helpful? We have just 4 stocks as of the day of the scan that we'd want to really focus in on, because they had dual time frame momentum reversals on stocks that were relatively strong compared to their sectors and the broad market. This is just, these scans are what we've based or rely on a great deal in our stock and ETF report, because we do these scans daily on all the sectors and all the stocks, and I'd recommend you do that too, to focus in on a very small list of high probability trade setups when you have a large number of symbols that you're looking at. That's the DT dual time frame scan that combines a lot of different factors from prior scans that we have, and I think this is the scan you would use every day, particularly if you're a stock trader. Be sure and view all of the DT virtual tour videos for a complete review of all the unique and powerful and practical features in Dynamic Trader. Also be sure and read High Probability Trading Strategies book, which provides step-by-step instruction of most of the trade strategies and trade management strategies that we use in our comprehensive trading plan. And DT owners have a complete series of getting started with DT videos and advanced charting and trade strategies videos on the password-protected DT owners pages.